Are you a hairstylist wondering how you'll ever retire? Does saving for a retirement feel so out of reach? Are you tired of the ups and downs with a busy and slow season and not having a plan for your future? In this video, I'll show you how to stop living client to client and get started for saving for your future. I'll walk you through retirement planning for hairstylists, opening an IRA, and building that financial freedom so you can take control of your finances and your life. It does not have to be scary, trust me. My name is Megan, and I teach hairstylists like you how to take control of your finances, save for the future, and build that wealth for yourself. Whether you're a booth runner, commission stylist, or a salon owner, I've been where you are. I'm sure where to start. But trust me, financial planning for hairstylists isn't scary or as hard as you think. Let's break it down together. I do want to address a few questions that I constantly get. What is an IRA and how does it work? For me, I was never taught what these acronyms mean, and I almost felt ignorant or dumb to ask. The definition of an individual retirement arrangement, or also known as an IRA for short, a great tool to help you save for retirement. An IRA allows you to invest your money that you make behind the chair so that it can grow over time with tax advantages. For hairstylists like us, IRAs are especially helpful because they are flexible, easy to set up, and don't require a steady paycheck like a traditional retirement account. I know what you may be thinking. Is there one IRA or are there many different types of IRAs? If there are many types, which one is the best for me as a hairstylist and why? Before I get into that, if you're feeling stuck trying to figure out how to save for retirement as a hairdresser or where to start with opening an IRA, this is exactly the work that I do. Helping hairstylists like you take control of your finances and build a secure future is the work I am dedicated to do. If you are ready to create a personalized retirement plan or just need some guidance, I would love to help. You can book a complimentary consultation call using the link below this video. I would absolutely love to speak to you. So which type of IRA is best for a hairstylist? There are many different types or retirement accounts. For the purpose of this video, let's go with what I consider to be the three main types that you should consider, and that is traditional IRA, Roth IRA, and the SEP IRA. Traditional IRAs allow you to deduct your contributions from your taxable income now while saving for retirement and your future. In 2024 and 2025, the IRS will let you contribute up to $7,000 in the traditional IRA. Okay, so here's an example. So let's say that I had a net profit in my business of $100,000 this year. That's amazing, right? If I contribute a full $7,000 per year to the traditional IRA, instead of being taxed on $100,000, I will now be taxed on $93,000, okay? With the state and federal taxes, this could save you a few $1,000s, and you are putting money away that is growing and you are doing absolutely nothing. The only downside of this account is when you do hit retirement, you will be taxed on that money. Another great option is the Roth IRA. What is the difference between the traditional IRA and the Roth IRA? The main difference is the tax situation. The Roth IRA does not let you take the tax deduction today, but it will let your money grow tax-free. And when you do hit retirement, when you withdraw in your retirement, you will not be taxed on this money. Once you get to a position where you can contribute more than $7,000 per year, another amazing option as a self-employed hairstylist is the SEP IRA. SEP stands for Self-Employed Pension. This type of retirement account allows for much higher contribution limits. As of the time I'm recording this video, the contribution limit is 25% of the net income your business makes, up to $70,000, whichever one is less. We're gonna stick to the $100,000 net profit example. So you can contribute up to $25,000, 25% of $100,000, right? The SEP IRA contributions for self-employed individuals are based on net earnings from self-employment, which is your net profit minus 50% of self-employment taxes. There is a lot of really complex things about this, So let's just say your adjusted net earnings is that gonna be that $100,000? So we're gonna do 100,000 minus $7,650, and that's gonna equal $92,350 when you factor deducting self-employment taxes. The max SEP contribution is 25% of your adjusted net earnings, but the effective contribution rate is really closer to 20% because the contribution itself reduces the compensation base. Now I understand, this is a lot. So for making it easy, we'll say the max contribution is gonna be $92,350,000 times it by 20%, and that's gonna equal $18,470. So with these numbers, your contribution can be up to $18,470, and that contribution will be reduced from your taxable income of $100,000. You now will pay taxes on $81,530 versus that $100,000. Assuming you are in that 22% tax bracket, you can save anywhere from $4,000 to $6,000 in state and federal taxes. Huge, huge win. You do have to pay taxes on this account though in retirement. This is something that you really do want to keep in mind though. They do have a Roth, which allows for after-tax dollars so that you do not have to pay taxes in retirement. You just don't get those tax savings now. Now that we know a few retirement options, how do we actually set one up? I'm going to teach you how to set up an IRA in 5 simple steps. If you've never opened an IRA before, let's talk about how to get started. First, you have to choose a broker to place your money in. Brokerages that we recommend are Fidelity, Vanguard, or Charles Schwab. I never know, that's a mouthful of Charles Schwab, I never know if I'm saying it right. I prefer and use Vanguard as we tell our clients to use Vanguard. They're so reputable, have very low fees, and a ton of great options to choose from. The website is also really user-friendly and really easy to use, especially when you're first starting out. Once you sign up on whichever brokerage account that you want to use, it usually takes about 10 minutes aside, look at all the website, look through it to make sure it suits you. Decide which type of IRA really suits your needs, either the traditional, Roth, or SEP. You can speak to your CPA, why it was hard for me to say, as well to help you with this. Next, you will want to link your bank account for easy and automated contributions. Finally, you will want to pick your investments and start regularly investing in them. Just because you put money into an IRA does not mean it is actually being invested, unfortunately. A little story time, we did have a client that literally was putting money into an IRA for 10 years. We finally talked to her and it wasn't being invested in. She was basically using this as a fancy savings account. She felt so defeated, but we immediately got her investing, and now she is on the right path. Her money is working for her. Again, if you are feeling stuck trying to figure out how to save for retirement or don't even know where to start, this is exactly the work that I do, and I love to do it. Book a free consultation call using the link below to learn how to work with us and our community of like-minded stylists. Now, what if you don't have a consistent income? Inconsistent income doesn't mean you cannot save. Trust me, I know exactly how you feel. When I am super busy and bringing in a lot of money, I feel like it's never gonna stop. But we all know it does slow down, and it's hard to save during those slower seasons and slower times because we got used to the spending. So just start by contributing a percentage of your income, even if it's 5%. I like to say contribute one service per week. Doing one service per week can really max out your Roth or traditional IRA. I would also automate your contributions so you don't even have to think about it. It's just happening automatically and treating it like a bill. If you treat it like a bill, it has to get paid. When you are in your busy season making more, you can increase that amount as well. It will get you to your goals that much faster, I promise. Now that you have your brokerage account set up, what are the investments within the retirement account? You can choose from a variety of investments like stocks, bonds, mutual funds, and index funds. For beginners, index funds and ETFs are a great way to diversify and reduce risk. while still growing your money. I am not going to give you direct investment advice here, but if it is something you are interested in, we do go over investment opportunities in our community. Before we move on, I would love to hear from you. What's the one thing that's holding you back or feels the most overwhelming about opening up your own retirement account? Drop a comment below and I'll personally read and respond to help you tackle these objections. Another question I'm asked a lot is, when can you access your money and are there penalties for early withdrawals? Well, there are a lot of variables to this question, but typically you can access your IRA funds at the age of 59.5 without any penalties. If you withdraw earlier, you will be faced with 10% penalties plus taxes. Please, let's avoid this at all costs. However, a Roth IRA allows you to withdraw your contributions, not the earnings, at any time without any penalties. This is one of the variables that a Roth allows, and there are many more, but just to be safe, I would not plan on taking anything out until you are 59.5. I am also asked, can you open an IRA if you have any other debts and no savings? The easy answer is yes, of course you can. It's all about the balance. Even if you're paying off debt and contributing the small amounts to your IRA, that can help you build that momentum and take advantage of the compound interest where the magic truly happens. The only exception to this is credit card debt. I would really prioritize getting those high interest credit cards paid off first before contributing to your retirement. If you're feeling late, just know it's never too late to start. If you are closer to retirement age, I would definitely consider maximizing your contributions and focusing on increasing your retirement account. Every dollar saved now will make a world of a difference. The common mistake that I see other stylists making is just not contributing consistently. Also, choosing high fee investments and withdrawing funds early. If you can, avoid these by automating your contributions and reviewing your investment strategy annually to make sure your account is growing like you should be. Also, report all of your contributions to your CPA to ensure you are getting the maximum tax write-offs. I hope this helps you open up a retirement account and start funding your future. If you have any questions, drop them in the comments and I will get back to you. If you are ready to dive even deeper, like I said, book a complimentary call at the link below this video and I would love to guide you on planning your retirement. If you have enjoyed this video, please like, comment, and subscribe. Your support means the world to us and gives us the encouragement to continue to make videos just like these.